corporate interaction then. We've got the management of eClerx joining in on the discussion. They reported their numbers about 2 days back. The top line of the company has gone up by 13%. Margins are on the flatter side, but within the company's guidance of 24 to 28%. Srinivasan, the CFO of the company, is now with us on the show. Thank you very much for joining in. First, if you could talk about the top line and the way forward. Now, for the first 3 months, first 3 quarters, you've clocked in about an 11-12% kind of a top line growth. Is that the run rate for Q4? And is FY26 likely to be better than FY25?
Yeah, hi. Thanks, Rima. Thanks for having me on the show. I think sequentially, our revenue went up by about 1.8%. And as you rightly noted, about 13% year on year. That's pretty much in line with expectations. And we're happy to note that all 3 of our businesses have shown growth in the year. We do have quite a strong pipeline, so we are expecting that if there are no significant roll-offs or changes, then there should be growth in Q4 as well.
Okay, and Q4 growth should again be in low teens? Is that the run rate? And what about FY26?
FY26 is kind of hard to predict. The pipeline is good, as I mentioned. And what we are also seeing is a buildup of large deals. So when we had put up our strategy for the year, we wanted to focus on large deals, and we wanted to also focus on cross-selling work between our 3 businesses. And there's been a buildup of pipeline in both these areas. So we are unable to predict what the revenue growth for FY26 will be, but all indications are that, the early indications are positive.
How much better is your deal pipeline today compared to, say, 3 months ago or 6 months ago?
I think it's about 20% up from 3 or 6 months back, and nearly 40% up from over the previous quarter last year.
Okay, that's a positive to note, because considering the wins have also gone up, you've managed to replenish that in terms of your pipeline, and it's up 20 and 40% respectively quarter on quarter, year on year.
Mr. Srinivasan, the other thing which we want to ask you is, as far as Q4 is concerned, what is the guidance that you have in terms of new logo addition? You've also mentioned in the call that you're looking at significant cross-selling and upselling opportunities. So Q4 FY26, top 10 clients, can they grow?
We don't give specific guidance on new logos or on the growth of top 10, non-top 10 in advance. So I will not be able to answer that question. But broadly, we should be able to see a growth.
But your top 10 clients didn't grow. The strategic clients didn't grow in Q3 versus Q2. Any particular reason for that?
There are always a little bit of movement quarter on quarter. So if you look at in the first 2 quarters of this year, top 10 growth was very, very strong. Just the third quarter, there has been a flattish trend on the top 10, but these are sort of short-term outcomes. The long-term outlook remains positive.
But are there any particular clients of yours which are under stress, facing certain headwinds because of which they brought down their work?
No, not really. There was short-term work that we were doing for some of these clients, which ended in Q2, the full impact of which we felt in Q3.
What about the cable as well as the telecom industry vertical? There's been a little bit of softness there. When do you expect that to recover?
I think the industry has been under pressure for some years now, as companies, as subscribers are tending to cut the cord, move to streaming services, and so on. However, in that space, our delivery has been excellent. So even though clients are under stress, we've been able to grow our footprint, and we've demonstrated growth in that segment. So for us, the outcome has been positive.
Getting back to the deal pipeline and your focus on large deals, what percentage of your pipeline today is, what you would constitute a large deal? And how is the deal conversion into revenues now? Because there was a slowdown in the industry. There were deals in the pipeline, but it was just not converting into actual numbers and revenues.
So we don't comment. I can't comment on the percentage of large deals in the pipeline. But to your second question, it seems that with the new year, the budgets have opened up and we are seeing some amount of traction and progress in conversion. So conversion seems to have turned positive, faster than what
Okay.
it was from the previous quarter.
Could you give us a sense of attrition levels currently? Also, give us a sense of staff utilization rates. We understand that on a sequential basis, it fell close to 140 basis points. What's the reason for that?
So in Q1, we had a buildup of staff because we were anticipating a lot of work in Q2. And that's why the Q2 utilization is at an all-time, near all-time high. And then that has sort of normalized in Q3. On the attrition is about 18% or so, which is well within manageable levels.
Srinivasan, what about generative AI? Because you're saying that the company has done a lot of proof of concepts on generative AI, but potential monetization has not been seen. Why is that? And do you see that changing in this, say, calendar year 2025?
Yeah, so monetization has not happened because clients are taking a lot of time to think over what it means for them and how they want to actually deploy the AI, whether they want to do it in a private cloud, and that if that is the case, then it means a lot more cost for them, or whether they are comfortable having the data go out and do it on the public LLMs. Then that leads to some amount of your data being shared outside, and therefore there is some amount of slowness in decision making that we are seeing from them, specifically on conversion of pilots to paid. Having said that, we have embedded Gen AI in all our productized services. So in our product data management tools, Gen AI is embedded. In our KYC compliance manager solution, Gen AI is embedded. So to that extent, we are using Gen AI in all the services that we are delivering to our clients.
Got that. And what would be the margin pulls and pushes in FY26? What are the tailwinds and headwinds as you see it looking ahead?
Yeah, so we've established a new center in Latin America. So there's going to be some facility costs. We've added 1,800 seats in our India delivery centers. So there's going to be housekeeping security costs. So we do expect there to be some pressure on margin in Q4 as well. But overall for the year, we should be well within our 24 to 28 band.
Understood that. Thank you so much for joining us, giving us a sense of how Q3 panned by and also sense of the deal pipeline as far as Q4 and FY26 is concerned. Well, moving on, time now for a short break. Saurabh Agarwal from EY India and MS Money from Deloitte India join us next to discuss their expectations from budget over indirect taxes.